What is going on, everybody? Welcome into another edition of the Daily Energy Newsbeat Stand-Up here on this gorgeous July 19th, 2023. As always, I'm your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Dallas, Texas, rocking a solo show today as Stu is out on assignment, doing some very big things. So we appreciate his efforts filling in for me the past 2 days. I have had a great day. Sunday, I just needed, it was a scheduled day off for me. And then at the last minute yesterday, I got the chance to go see the Texas Rangers play a little baseball. So I appreciate Stu filling in for my absence, but nonetheless, I am back to bring you the news. We've got a little bit of a shorter show, but I think two stories that are going to be great to cover. First up, bank earnings and inflation start earnings season with a bang. We saw on Wall Street, pretty big rollout of earnings. I'll cover a little bit about what's going on with the early results. Next up, we have global oil demand to reach record high in 2023, according to the IEA. They're out with their new oil market report. I'll then quickly cover what's going on the oil and gas side. Since we've last talked, baby, we're at 75, 72. Oil up 1.4 percentage points today. So all is well with the markets. API comes out and actually has a little bit of a draw. Fed looks like it could not even cut rates. So I will cover all that in a bag of chips, guys. But first, again, all of the stories and analysis you're about to hear are courtesy of the world's greatest website, www.energynewsbeat.com, the best place for all of your oil and gas and energy news. Dashboard.energynewsbeat.com, the best place for all of your data and energy news combo. We are hard at work at V2 trying to bring you guys a better thing. Hit the description below. You can sign up for that to get early access to mainly a lot of the development features that we're working on. And then second off, you can hit and find all the timestamps, see all the stories we are about to cover. They come again courtesy that world's greatest website, energynewsbeat.com. Let's go ahead and look, though, at earnings season. So title of this one, bank earnings and inflation start earning season with a bang. Really what you've seen starting on Monday and today is you're going to see over the next 3 to 4 weeks, a huge swath of 60 S&P companies that are about to report here. We had 12 S&P companies roll out today. Specifically, banks and financial services were a better part of that. We saw a lot of CPI data come out and increase. And really what you saw was on the back of some stronger earnings from these banks. What we saw, JP Morgan face, Citigroup, State Street, Wells Fargo, all beat earnings estimates. That all of those guys posted better than expected net interest income as they earned more on lending versus what they paid to depositors. So that's critical in the age of America. To give you an idea, we'll get Goldman Sachs, Schwab, Bank of America, Bancorp, Discover, American Express, Comerica. They're coming later this week. But that early group I talked about, JP Morgan, Citigroup, State Street, Wells Fargo, better than expected net interest income, which again, in light of the whole SVP deposit debacle, that's good to know. And again, big banks are going to do well with that. Everybody's flooding cash into these banks, specifically after, again, this article goes on to mention the collapse of Silicon Valley Bank. Again, outside of earnings season, part of what we're seeing in this stock market rally, which has rallied us all the way up to about 45.54, is really, better than expected CPI data. Again, I take that with a grain of salt because a lot of the times they don't include energy in this, which is a crime, which is, I won't get riled up over that, but it's a crime what they do over there. To give you an idea, Atlanta's sticky Fed inflation that they call it declined year over year from 6.1 to 5.8. So we're doing so much better. All that is sort of leading to what's seen this rapid rise in stocks. We're going to see oil and gas stocks really rolling out next in the next 2 weeks. You're starting to see them. If you go look at any Barron's news feed, you'll just see that they're all announcing, or press feed, excuse me, they're all announcing they've got them coming up here. I think you're going to see weaker than expected data coming out, considering we're talking about quarter four of last year. I think you're going to see weaker than expected, but I do think you're going to still see strong numbers. And I do think specifically because we're going to see oil prices being a lot more bullish, I think you're going to start seeing a lot of this reinvestment starting to look better. I think what you're going to see is a lot of reinvestment in Q4. You're going to see a lot of reinvestment from companies. They spent a lot of money when they throughout that high oil price, cycle back there in 2022, in order to attempt to, again, capitalize on some of the stuff going forward. So again, with energy and specifically oil and gas earnings coming up. There's a lot to look for. I think it's also important. I want to look at here this IEA oil market report. So the title of this one, Global Oil Demand to Reach Record High in 2023. This is out of the IEA. I'm going to read a lot here from the article, because what this is their, what they call, as I mentioned, their latest oil market report out of our favorite energy analysts over at the IEA. 100% credible. We subscribe to every word they do. Top line numbers: global oil demand will increase by 2.2 million barrels per day to reach a record high of 102.1 million barrels per day in 2023, courtesy of our favorite data analyst. To dive into those numbers a little bit, China's going to go ahead and account for about 70% of global gains, really off the back of their petrochemical use. The quote out of the IEA says China's widely anticipated reopening has so far failed to extend beyond travel and services, with economic recovery losing steam after a bounce back year. Yet they're accounting for 70% of the global gains. So we love a little marketing twist there. IR guy of the week right there. They do actually project some growth to slow to 1.1 million barrels per day in 2024. The quotes there saying the world oil demand is coming under pressure from challenging economic environment, not the least because of a dramatic tightening of monetary policy in many advanced and developing countries over the past 12 months. Interesting. No mention of renewables. It's all in the global financials. Interesting little pivot there. They forecast global oil production to rise by 1.6 million barrels to 101.5 million barrels per day, as output from non-OPEC production nations is expected to increase by 1.9 million barrels per day. They also see global oil supply rising to 102.8. So they think fairly in balance, with about 700,000 barrels over balance. That's interesting because we're seeing prices rise right now. So that's what I find hilarious, is that, prices off the back of this rise, when they show, whoa, maybe we're oversupplied now, when we see oil supply, quote unquote, outstripping oil demand. But again, I think a lot of what's going to is we're looking at that refined product, and I think some of the environment that we're seeing is the downstream capabilities. Observed global inventories rose by 19.4 million barrels to its highest level since September 2021. World oil demand. I'm trying to just read down here. Forecast for global oil demand is China, blah, blah, blah. We also saw this. This is a separate IEA report. Fossil fuel investments are set to rise by more than 6% to around $950 billion for 2023, based on analysis from the announced spending of planned large and medium-sized oil, gas, and coal companies. So there, again, I think this is this is not specifically for quarter four, as I mentioned in segment one, but I do think you're going to, there is a sentiment of there was a lot of CapEx spent, maybe more than people expected, on the back of what was higher oil prices, sort of the fleshing out of that process. So all in all, the IEA seems to be sort of bullish, sort of not. I find it funny how they think we're oversupplied. Everybody thinks we're going to be undersupplied. So the IEA trying to come out and I don't know. I think they're using the same crayon Stu uses. So we're going to have to check their math on this one. All in all, although as we move into oil prices, the street really reacted positively. We were up about 1.4 percentage points, mainly again off this report, but again off report in China that retail sales and mainly the fact that the Chinese government, where's my little quote here out of China. Let me pull that up here, folks. Yeah, here we go. China's top economic planner pledged it would roll out policies to, quote, restore and expand consumption throughout delay. Probably means quantitative easing from the Chinese side. So guess what? Hey, that's good for oil demand, because that means we're gonna need more oil. So sure, now we've got money printing going on in China. Fun, but that's gonna boost oil prices. So we gotta love it. To run you idea, after those CPI numbers came out last week, and on the back of a retail sales that are less than expected, there is a sentiment floating around now that we're gonna not need that another 25 25 basis points rate hike, which was widely expected at that July 25th, 26th meeting of the Fed governors. Jerome Powell may come out and not do that. It'll be interesting to what happens, but that's part of, again, what leading to that 1.4% rise in sentiment. We also saw the API come out today specifically and say we're going to be about a million barrel draw, 0.79, 790,000 barrels on that draw side. So not terrible in terms of that. So again, I think all in all, leading up to what is a bullish and what again is the bullish back for oil. It'll be interesting where things end up. That's really all I've got, guys. Thanks for Stu for being on assignment, working hard for all of us, even when he's not here. He probably I didn't listen to his last two shows, so if he made fun of me, I was really nice to him right there. So if he made fun of me, screw him. He's dead to me. I'm just kidding. We will both be back tomorrow, guys. We appreciate it. For Stuart Turley and Michael Tanner, we'll be you then.